Good morning, Pacer Nation. Shout out Pacer Nation.
That's right. That's right.
We were just discussing a question that we didn't get to let Matt answer. Matt, what do you think of Titans Blue? Are you ready to tighten up?
I think blue is I think the color blue is deep in the human psyche. It's been used for thousands of years. So I'm all in. I'm all in on blue.
Love blue. Shout out blue.
Now let me ask you real quick. I'm going to ask a question to everybody who's listening. Titan Blue or North Carolina Tarheel Blue? What do you think?
Ooh, I think the older you get away from high school hats and jackets, you go dark blue, navy, royal, darker blues. So yeah, not 14-year-old Matt would have been like UNC blue, but not
14-year-old Matt.
Well, listen, I'm all in on UNC and Titan Blue because I hate Duke. So
we can agree on that.
Well, we can all agree on that.
That's right.
On that note.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Well, good morning. Like I was saying, Duke sucks, and that's something we all agree on. And we're here today. So, guys, listen. I think we all kind of guessed it yesterday. Yesterday was an inside day.
Yeah.
It by the skin of our teeth.
Made it a little scary, Troy.
Now let's talk about this inside day.
Well, so that's a great question, because inside day can mean a couple different things to different people. I think of inside day as a feeling more than a number. And so when I say inside day, I'm not even talking about expected move. I'm talking more about just the tone. And to that, I would say yesterday was absolutely an inside day. If you look at when we were down 50, we basically the tempo was just so slow that you could tell, if you watch the market for any length of time, you could tell that it just wasn't going anywhere. That was my read on it. But what did you guys think watching yesterday's action?
I think during these times, like, it feels like I don't know if we're coming down out of high VIX, but you have these like kind of unchanged days where the waters are very choppy and then the day is unchanged. I mean, I think the range was not far off 100 points, maybe 80 or 85 points. And we closed within nothing. So, I don't know. Yeah, we can talk about the definition of inside day. We can also talk about in a future episode, maybe what this vol environment is doing to back tests and folks who usually run spreads that have stops on them. I've seen a few people float the idea of, instead of sizing versus with kind of a stop in mind, which, disclaimer, like, your true risk is your spread width if you're selling premium. But some folks, I saw one idea where people were selling smaller spreads, still getting a good VIX, but they were just letting them ride or die because the vol is juiced enough. And if you have a return to mean day like yesterday, the tests like it. So,
yeah, I mean, looking at looking at futures here a little bit, we're kind of all over the place this morning. Again, I hate to say it. I'm going inside day. Now, here's why ultimately. I think the market, I mean, obviously the market had a crazy couple move last week, percent move last week. And it's very natural to have like balancing days. And I think we're balancing right now, trying to find acceptance above this 5,500 level. I think Apple earnings and Amazon and Microsoft are going to be catalyst movers. And so I think everyone's just sitting pretty until earnings comes out on some of these bigger tech ones.
Yeah, and we have, I need to pull up the earnings calendar. I think I posted it yesterday. I think we have kind of more sizable movers tomorrow, right? For is Wednesday. That when the tech companies start reporting?
Yeah, you've got what is that, Wednesday?
Yeah, Wednesday. After Wednesday is Microsoft and Meta. Those are the two you
Wednesday,
mentioned.
I've got Wednesday, Microsoft, Meta, Robinhood, and then Thursday, Apple, McDonald's, Amazon, Lilly, and then Friday, the oil kings.
Yeah, so this is probably from a market cap perspective, this is the biggest week, I think, for earnings because Google already went, and then you've got
Microsoft, Apple alone.
Microsoft, Apple, and Facebook. So
Well, I think PCE. I think that. What do you think? Could that be PCE tomorrow morning before the opening, and then GDP, and then Friday U.S. farm payrolls? I thought, yesterday I thought, or maybe it was hope more than thought, that when we were down, I thought, we were up so much last week. Could they take it and keep it down 100? Obviously they didn't. I didn't think they'd rally that much at the end of the day, but as Matt said, I think they're kind of waiting until, some of this news comes out before they really put the hammer one way or the other. I mean, the bulls are in control right now, but that could be very fickle, right? A couple things come out, earnings and what, even
100%.
Yeah,
100%.
I think it's just sitting back. I mean, I think usually what I've noticed is these weeks where you have a lot of this is one of your big weeks, right? For a lot of stuff. But I think until the news comes, I think the zero day stuff works really nice, right? Just because they're kind of inside type days generally, even though yesterday got a little hairy. But like I know Iron Condors yesterday, 0 day worked well and different things like that. But I think Wednesday it starts getting hairy, right? And starting at the opening because PCE comes before the opening. And so we'll see, if because it's not, wouldn't you agree that this, this battle of 5,500, right? Especially in the futures, that's quite a battle. I mean, it's not like we've really convincingly, we've gone a little bit over it, but
I think that's, I've seen it sometimes too, where you, on the upside, you'll get these levels where you'll go up to a level and you wait and you kind of balance and it seems like it's not going to break through.
Yeah.
And the breakthrough comes on a gap and you don't see that level again, where it's like, I could see us getting to 55.50 and like, it seems like we're not going to get past 55.50 and then we just gap and it's 56.25 and we don't look back.
No, that's a good point. Instead of it being like intraday moves, a gap. Yeah.
Yeah. So let's look at the test because I know people have been chattering about what the heck are we doing with some of these tests. So I would love to look at one thing. And what I'm going to look at real quick, if you remember yesterday, we started talking about butterflies with credits. And this is what we did yesterday. And I said yesterday, this is a crappy test, but Tom, important question. Matt, 6,000 or 5,000 first?
There's already been an official response to that in the chat.
I like that. I love that. Mechanical trading. So this is a test where you buy an 80 point out of the money call. You sell 15 points above that too. and you buy 50 points above that 80. So basically 80, 15, 35. And you do it at 10:30 in the morning, 10% of capital, and there's no allocation besides that, or no guardrails or anything like that. Guys, just to recap, what do you think of that?
I'm always interested in tests that you can sell for a credit and get a credit.
I mean, yeah.
So I love the concept. I don't love this back test, obviously, because of the drawdown and the MAR, but I think that's kind of the point. I mean, this back test there's no rails on it, and it's not fitted at all. So love the concept.
Yeah, it's from a premium selling point of view, as they would say, and I'll go over this in a little bit, but it's a high probability trade. You're selling by going 80 points out of the money for the long, and then 15 points away for your short, and then 50 points away from the original long for your upper long. Bottom line is you're probably selling maybe, what would you say, Troy, like a 15, 17 delta for the short. So it's a high prob. It's an interesting trade. It's a high prob trade. It's in the family of credit spreads, skip strike flies, where you're short some delta, right? So you kind of would like it to go down, but there's a window on the upside where you can ka-ching, 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 right? You've got it if it goes up, but if it goes up, your risk is if it goes up too far, because you have more width, that could hurt you on the upside. But it's a good trade, and especially when you have some premium. Again, we're still 25 or over, so I like it. I think it just people need to understand it's kind of weird. Even though you want it to go up, you make your most money if it goes up near the short strike. If it goes too fast, as Mr. T would say, remember Mr. T, pain. You're gonna,
you pity the fool.
Yeah, pity the fool. So it's an interesting trade.
Well, and to that point, Dan, it's a weird trade, and I would put this in the advanced category. And so anytime there's an advanced category trade, I think we go to the master himself. Would you show us some Greeks about what's happening in this trade?
Yeah, I just threw up a couple things real quick. If you can see, can you guys see my screen?
Yep.
So this is exhibit number 1. Now I know sometimes before the opening things can be a little bit funky,
sure.
But if you look here, we're buying is trade. So if we look at this close at 55.28, right? So we'll call it 55.30. So at 55.30 on the study of the starter trade with a credit, we go up 80 points. So this kind of long here, you'd be buying the 56.10 would be your first long. Then you sell 15 points up, which would be 56.25. Okay, so there's 15 points between that first long and the short. And then your last long is going to be 56.60, which is, they do this right, yeah, 56.60. Does that look about right, Troy, with the...
Yeah, I think so.
The combos. And so when you have that trade, I would call it, it's a broken wing butterfly. You could call it a skip strike butterfly. We bought the 56.10, sold the 56.25. There's 15-point difference. So you have 15-point difference here. And then you have 35-point distance here. So, if it goes down, wonderful. If it doesn't go up too fast, wonderful. And again, this is where we closed last night at 55.30. What you'd really like it to do is slowly go up. The expected move tomorrow, this is a one-day trade, the expected move tomorrow is about 80 points. So if we can get up to this 56.10, 56.20 area, you got an opportunity to hit a triple or a homer because you can see the profitable area there. But again, if we were to go up 60, 70 points today, you're almost 3 delta short. That would be too quick to go up. Yeah, you could be down a couple $100. Now, the other thing is because it's more broken wing, this trade would be about $1,900 of capital. And you're bringing in a credit of, again, I think it's higher because the credits Troy showed on this were closer to what, $2, $3, Troy, the credits. So I'm wondering if this is.
Oh no, I think actually the opposite. I think, let me just look to make sure. No, you're right. Sorry. No, you're right. I was going to show you a different test in a minute. That one is $1 to $2.
Yeah. So this is maybe a little low 80-cent credit, but I think in a high vol environment like this, I like these when kind of the market has pressed up like this. We had a big week last week. And again, like Troy said, if you think, we can be 56 or 100, 5,600 or lower, by the end of the week, 56 and a quarter, this is fine. But again, if it goes up too quick, could be a problem. Now, real quick, if you look at a couple other ideas, here's again, a split strike, butterfly. And again, the short that Troy was looking at was around a 15, 17 delta. So it's a high probability trade. Here's a broken wing. This would be 10, 20. So this is going to be less capital, $900. And you get in similar credit. That's one. So these trades are going to be, kind of in the iron condor family, but one side, right? No risk to the downside. A couple other quick ideas. Here's what if somebody said, you know what? Path of least resistance is up, but we could have something to the downside. Also, you could run a double butterfly, right? And it's basically costing you like $2.30.
The old Batman. I love it.
The Batman, yeah, you're putting a butterfly on the upside at about 56.10. So you're up near the expected move. On the downside, similarly, these have worked pretty well, and they're pretty cheap. I just did 20 wide, put my short strike kind of where you want it, near the expected move, 20 wide, balanced butterflies. Balanced are always going to be cheaper than broken wing. And this would be about 230, but these can explode if you hit one side. I like these because I'm horrible picking direction. And so that's a balanced butterfly. And then the last one, if you just said, hey, you know what? I think we're kind of trending up. I still think by the end of the week, if you want to pick a direction, just do one side. We kind of call these time bomb butterflies, put them way out of the money. If you want to put it at a 10 delta, 15 delta, but I put it here near the expected move of 56.20. Balanced butterfly is going to be your best potential yield. This costs like $90, but you can see here, if we're in this area, you could, you got a good chance to make 300 to 500% if we're in the I call it the landing strip. So the landing strip would be about 5,600 area to 5,642. So there's different ways to do it. But one last thought I want to leave you with is, if you go back to the original butterfly that we looked at yesterday in class to start a trade with credit, a lot of people, when you look at a trade like this, there's two ways to look at it. Some people will say, well, it's a bullish trade based on the expiration graph. But I kind of give the nod, especially early in the trade. What do the Greeks tell you? If I'm leaning 2 deltas short here today, it's short deltas. Yes, it's not a bullish trade today, but is it at expiration a bullish trade? It's a bullish trade in this window, right? As long as we don't go too far, right, past the expected move. So you could call this bullish at expiration, but it's the deltas that tell you right out of the gate, are you bullish or bearish? This should be, slightly bearish out of the gate. So anyways, that's my 2 cents for just a few thoughts on that.
I love it. I mean, I think that's awesome, Dan. It's like show the part of this, and so I'm going to show you 2 more tests today. that are really different, but the concept's the same. Because one of the things with this is there is a lot, because it's an advanced one. You can definitely automate this, and we'll look by the end of the week. We'll look at some stuff that you can automate. But I will say, this is also a trade that can be discretionary. Or if you're going to do an automated one, you have to be smart about. I'll put it this way: you should probably break this up into 3 strategies rather than one. That's a hint, I suppose, because there's different environments. But let's look at a different one here real quick. So this is what we just looked at, right? This is that 0.2 MAR, 80 deltas. I'm going to do one different thing and just look at it instead. So instead of buying 80 points out of the money, we want to be a little bit smarter than that, right? We don't want to be the people that are just stuck all the time, the 80-point guys, you know? So one thing you can do is, I don't know if you can see the difference there, buy the 5 delta. So simply buying the 5 delta improves the trade. Again, it's a small data set, 63 trades, but it works in those 63 trades, you can say. Buy the 5 delta, and I moved it to 10:15 in the morning. Shout out Steven for doing some research, saying, hey, 15 minutes earlier is better. And that's it, right? So what does that give you? Well, instead of 80 points out of the money, you think of stuff like, let me go back a couple of days here. This is a good example. In the midst of the chaos, Wednesday, April 16th, price is at 53.20.
Yes.
You actually, a 5 delta, is actually roughly 200 points out of the money, and you're still getting the credit. So switching to that 5 delta gives you a lot. Now you're collecting much less capital, right? Instead of $1, $2, you are collecting, but because of that, when the win rate goes up, and you know, the safety goes up a little bit. With it, margin's also going to go up, so you have to be aware of that. Go ahead, Matt.
Well, I was just going to say, yeah, I mean, and when you look at this trade, I mean, I always have to think about these butterfly structures, because if you scroll back up to the top, I mean, again, there's no exit conditions on this. So I think we're going to continue to refine it, probably add some exit conditions. But on these ones that are ride or die, if you do go up into the tent past where you want to go, there's a very good chance of mean reversion back down to, you know, a Yahtzee or where you want to finish on something like this, pinning the shorts or thereabouts, you know. So I love the work on this. So shout out to the chat for the great work on, and I saw several refinements of this on the Discord yesterday. I thought it was awesome.
And you'd also like this, I think, wouldn't you agree? If you're going to get, because in a way you're saying, if you're saying, I want more room on the upside, which this is, right, Troy and Matt? So if you want more room, you know, to me, when the times that I get scared of the upside, or when I think we can really run, I mean, sure, you could say breakouts, yeah, but when we've had 5, 10, 15% corrections, I'm always nervous. It's
terrifying.
Yeah, to rip your face off reality.
Yep.
And so in situations like that, that's when these would come in, because you need more room. And a 5 delta, you know, that would, you know, this fly is basically saying, hey, we could have a big one. And you know, I think that situation comes up to me, because I don't think people really respect enough when we're down 10, 15, 20% in the market. We're not coming back 10 points. We're coming back strong.
That's
and
right.
It could be 2 or 3 days even. And that's the thing here, 2 or 3 days. So I think, you know, this is definitely something to be in your arsenal.
I agree. And I mean, again, it's here's the thing. I hate being long. I mean, that's in a general, like, that's my disposition. I hate being long. And so I don't like to pay debits for long stuff. And I recognize I probably leave a lot of money on the table, but this is something that helps me at least have some long stuff on.
Yeah.
But perhaps not have to pay much for it. And so Yeah, I'm gonna show you one more. Now this trade is crazy. I mean, like it's a advanced trade, but we're gonna get a little even more advanced, and then let's take it back and talk about some simple things that you can do. So this is again a 1-2-1, but what happens if we go a little bit even more nuts than that? And I give you the 1-3-2.
What?
The 1-3-2. So this is what we're doing here. Now I'm going to tell you straight away. This takes a lot of margin. So and I'm going to talk about addressing that here in a minute. But let's just go with it right now. So what you're doing is you're buying a call that's 50 cents one day out. Okay. You're selling three calls that each cost 25 cents.
Right.
So your net credit's 25 cents at that point, right? And then you're buying the cheapest call you can find.
Okay, so it could be very, very wide.
It could be very, very wide. You are basically synthetically naked. That's how wide it is.
Yeah.
Okay.
Yes.
Wow.
You're not naked. I mean, you're not naked, but your dad's telling you to go upstairs and get some more clothes on. Like that's what's happened.
Loincloth. Yeah.
That's right.
Yeah.
So but here's one of the keys with this. You're only doing this when we've gapped up 1/3%, basically. So first thing in the morning, 9:32, if we're up 33%, not 33, if we're up 1/3%, 0.33, you are putting this on, right? And it's a 1 day. Now, why does that work? Well, let's talk two things. Why that strategy works and then the structure of it. So the strategy, the idea of saying, to Dan's point, you don't want to have you don't want an intraday gap up of 300 points.
Yeah.
So
right.
that's going to help you maybe as we go through the week, think about some filters. How do you filter out gaps up to 300 points?
Yes.
We can work on that together.
Yeah.
But two, you want a day that's already looking. So in my mind, I look at these trades as like you're trying to trick the market a little bit, which is dangerous game. But you're trying to say basically, when the market is acting like it's going to continue going up, you're selling with the idea that it's probably not going to go up that much. Like that's the trade. It's a mean reversion thing, basically, to say even if we're accelerating fast, even if we continue to go up, we're not going to go up that fast. This past week is actually a good example of that. Like it's like you have fuel in the tank. And last Monday, last Tuesday, we had a lot of fuel in the tank. 100 points. Next day, 100 points. Next day, 50 points. Well, you get into this week, and like the fuel's kind of getting out of the tank a little bit until you fill up again. And it's a giant game of trying to guess or automate or look back on the data and therefore guess it appropriately. At what point in a cycle will the fuel run out? And with this, you're basically saying like, I want to get in when we've already burnt a little bit of fuel.
Right. I think that's wise. Yeah.
Now the structure of it, why a 1-3-2? Well, basically, it's just a different way of trying to get a credit. You're trying to be net credits going into this, and so what that's giving you is really, really far away stuff.
Yeah.
I mean, let's look at that for a second, just because I think it's. I mean, the last one. Let's look at one when we were at 52 is probably the lowest we got to with this. So 52. Now bid ask is wide on this because when we were at 52, bid ask was wide. Like it's pretty straightforward. But we had gapped up, right? And so we were 52.23. Well, where is the 56.65 expiring the next day? You're 400 points away.
Yeah.
And so using that type of credit is a rather than points, I would argue either use delta or credit, right? And that way it puts you in a spot appropriate to where the market is in a volatility environment.
And one thought as I'm looking at this is, yeah, like you said, this would go under the category of super duper advanced. It would be interesting. You'd have to rejigger this trade a little bit using maybe like even using a delta, but this might be the type of structure that using a max width on the short might be interesting to play around with. And we just added into the backtester and the automation platform recently the ability on child parent offsets where you can cap the max distance. And that might be an interesting thing to play with on this type of setup.
Yeah. And
100%.
The only other thing it'd be Troy, I don't know how much did you play with you don't want to tweak it too much, but like, I think you started the journey with, or you started buying your one leg is the 50 cents, right?
Yeah.
And what delta? I mean, that's got to be like.
It's probably 1 delta, 2 delta.
Well, that's what I'm wondering, to get a little more profit. How much could you squeeze without adversely affecting this? Could you, instead of buying the 50 cent, if you come up a bit, to maybe buy $1 or 80 cents or
Dan, that is perfect segue into tomorrow's talk, because
okay.
no, you're good. Basically, the way I look at this, like I said a while ago, you should not have an evergreen call credit butterfly strategy. If you're going to do these, you should have 5 different strategies for call butterfly strategies, because
Absolutely.
I would argue that one I just showed, the 132 stuff, that's actually for the environment we're just now coming out of, that high VIX environment.
Yeah.
I would say in a lower VIX environment, you can actually get away with collecting more credit for a shorter thing.
Good point.
And so
yeah,
I think that's the way to do it. Now, I'll say this in closing, just because I do, out of an abundance of caution, is my Knox County schools. Whenever I get the voicemail that school's out for nothing, for absolutely nothing, I'm gonna say, let me just give me 10 seconds here. I mean, Dan, for rain, I'm saying for rain, you'll get a call. It's raining outside. You get a call. Hey, this is so-and-so from Knox County Schools, out of an abundance of caution. Like, are we turning into 95-year-old people that can't go out in the rain? Like, I don't understand. Anyway, so sorry, that was emotional.
Naples, Florida, the older people in Naples would be.
I know.
Fine. Yeah.
So two things with this, out of an abundance of caution. Don't think of these as trying to hit home runs, and don't think of these as necessarily just trying to collect $10 credit. Your goal really of this is to, and I'm giving a hint here of how we're going to improve on this. Your goal of this is to scale out of these, to have enough of these on. And so there's 2 ways that in my mind I scale. One requires discretion that you can't automate, and one is a way you can automate. The way you automate is, as price expands on these, let's say you do have a slow grind up, and then suddenly you find yourself it's 1 hour to go and you're 30 points away or 20 points away, and you have expanded from a 10-cent credit received to a $1.50 credit received. You should get out of that. At least take some money off the table of that, right? And that's the one way. The other way I would suggest thinking about this is, today's a perfect example. I've got some of these babies on. I'm personally trying to get XSP liquidity up. I've made it a mission of mine to try to get XSP liquidity up. So I've been trading a bunch of these, testing some stuff with XSP. And I have some that expire today. Now, I'm not worried and they're at the 560 strike. I'm not at all worried that we're going to get to the 560 strike today. I'm not at all worried about that. But because the environment we're in, I'm probably what we're going to do on the open, because we're down 30, because we crashed.
Yeah, we had a little bit of move when we started showing back lists.
Bessett's talking, and I knew that was good. But what I'm probably going to do on open, and this is one adjustment you can make, is any down move on a cheap thing, take any of the credit you receive, 5-10 cents. You've locked that in at this point on that down move. Move that long call that's farther away in,
right,
and turn it to risk free, or even make it a debit if you're like, hey, I'll take a shot now. I'll pay 5 cents now.
That's
like
good.
That's just a quick way that you can get money off the table, get some margin back, and things like that.
Yeah.
So, guys, we'll continue the talk tomorrow. We've got more fun things to show you. I could talk about these literally every day. It's one of my favorite options trades. So, anyway, guys,
it's amazing how much, like you said, in how butterflies is one strategy. You can just go berserk. How broken wing and how you want to do it. It's a lot of fun. I mean, it is
balanced, unbalanced.
Balanced,
someday we might do an unbalanced broken wing, get crazy, who knows?
Yeah.
Yeah, that's right. All right, guys. Well, listen, have a great trading day.